Let us talk about one of the biggest and most stressful challenges you face as an international student, figuring out how to pay for your education in the United States or Canada. You've worked hard to get your acceptance letter, but now you're staring at the I-20 form and the massive cost of attendance, and the question is, how do you cover the gap? If you've been searching for information, you've probably seen a lot of American students talking about FAFSA and federal student loans. And you've also probably discovered the hard truth: international students are not eligible for any U.S. federal student aid. No FAFSA. No direct subsidized or unsubsidized loans. This can feel like a door slamming shut. It can make you feel like your dream of studying abroad is impossible. But what if I told you there are other doors, specifically designed for you? The process is just completely different, and it requires a strategic approach. This video is your honest and realistic guide. We are going to walk through the actual pathways to secure student loans as an international student. We'll cover the most common option that requires a cosigner, the specialized lenders that don't require one, and the alternatives you must explore first. By then, you'll have a clear action plan to tackle the financial part of your study abroad journey. The first and most critical concept to understand is the fundamental difference between the American system and your options. U.S. federal student loans are funded by the U.S. government for its citizens and eligible non-citizens. As an international student on an F-1 visa, you do not qualify. This means your entire loan search shifts to the private sector. Private student loans are offered by banks, credit unions, and specialized financial companies. These lenders are not evaluating your academic potential, they are assessing financial risk. They need to be confident you will repay the money after you graduate. This is the core challenge you face. You are, in the eyes of a traditional American bank, a high-risk borrower. You have no U.S. credit history, you have no U.S.-based income, and you may not have any assets in the country. This is not a reflection on you personally, it's a simple matter of risk management for the lender. Understanding this reality is the key to building a successful application strategy, because your entire goal is to find a way to reduce that perceived risk. The most common and often most affordable way to reduce this risk is by using a cosigner. A cosigner is not just a reference, they are a co-borrower. This is a massive legal and financial commitment. A cosigner is typically a U.S. citizen or permanent resident with a strong, established credit history in the United States who agrees to sign the loan application with you. By doing this, they are legally promising to make the loan payments if you cannot. For the lender, this is a game changer. They are no longer just looking at your non-existent U.S. credit profile, they are looking at the cosigner's excellent one. This makes approval far more likely. But even more importantly, it allows you to secure a much lower interest rate. A cosigner can literally save you thousands of dollars over the life of the loan. The challenge, of course, is finding one. Do you have a relative living in the U.S.? A close family friend? This is a huge thing to ask of someone, as your financial behavior will directly impact their credit score. If you have a potential cosigner, your best bet is to approach traditional U.S. lenders like banks and credit unions that offer international student loans with a qualified cosigner. Now, let us address the scenario that most international students find themselves in. What if you don't have a U.S. cosigner? This used to be a nearly insurmountable barrier, but in recent years, a new category of financial companies has emerged to fill this gap. These are specialized lenders that focus exclusively on international students. The two most well-known are MPOW Air Financing and Prodigy Finance. Their entire business model is built around assessing the potential of international students, not just their current credit history. How do they do this? Instead of relying on a U.S. cosigner, they evaluate you based on your academic record, your future earning potential based on your course of study and university, and the proof of your financial stability. This is a revolutionary approach. However, it comes with trade-offs. Because they are taking on more risk without a cosigner, their interest rates are generally higher than what you might get with a top-tier cosigner from a traditional bank. They may also have origination fees. But for thousands of students, they are the key that unlocks their education. The application process is entirely online, and you can often get pre-qualified to see your potential rate without a hard credit check. Before you even think about applying for a private loan, there is a golden rule you must follow: exhaust all non-loan options first. Student loan debt is serious, and for an international student, the stakes are even higher. Your first priority should always be free money and other funding sources. This means you need to be relentless in your search for scholarships and grants. Many universities offer merit-based scholarships to attract high-achieving international students. You should have already applied for these, but if not, contact the university's International Student Office and the department of your specific major to ask about any available funding. The second priority is personal and family funds. How much can you and your family contribute from savings? The third priority is on-campus employment. On an F1 visa, you are typically allowed to work up to 20 hours per week on campus during the semester. This won't cover tuition, but it can significantly help with living expenses. Only after you have maximized scholarships, family contributions, and on-campus work should you look to loans to cover the remaining gap. Calculate that gap carefully. Borrow only what you absolutely need, because every dollar will cost you more in repayment. If the U.S. private loan options are not sufficient or available, another crucial avenue to explore is in your home country. Many countries have government-backed loan programs or private banks that offer educational loans specifically for citizens studying abroad. These can sometimes offer more favorable terms than U.S.-based private lenders because they are based on your or your family's financial history within your home country. For example, some banks in India, China, and other countries have specific study abroad loan products. You will need to research the specific requirements in your home country, which may include having a family member act as a guarantor or collateral like property. Contact major banks in your home country and ask directly about education loans for studying overseas. This can be a vital part of your overall financial package and should not be overlooked. Once you've identified potential lenders, the application process itself requires meticulous preparation. You will need to provide extensive documentation. This typically includes your passport and visa information, your I-20 form from your university, proof of admission, and documentation of your cost of attendance. You will also need to provide information about your academic background and potentially your test scores. For lenders that assess future earning potential, your specific major and the university you're attending will be heavily weighted. A student studying computer science at a top-tier tech school will likely be viewed as a lower risk than a student studying a field with lower average starting salaries. And this may be reflected in the interest rate offered. It is absolutely essential that you shop around. Get pre-qualified or official offers from multiple lenders, including a cosigner option if you have it, MPOWER, Prodigy, and any home country options. Compare not just the interest rate, but whether it's fixed or variable, the repayment term, and any fees. Read the contract carefully, especially the sections about when repayment begins and what happens if you have trouble finding a job after graduation. Before we finish, I have to end with a crucial disclaimer and a strong word of caution. Taking on student debt as an international student is an enormous responsibility. These loans are not dischargeable in bankruptcy and will follow you regardless of where you live after graduation. Failure to repay can severely damage your credit and your ability to ever secure a U.S. visa in the future. I am not a financial advisor, and this is not financial advice. You must carefully consider the total debt you are taking on relative to the expected starting salary in your field. Borrowing $100,000 for a degree that leads to a $30,000 a year job is a recipe for financial distress. Your goal is to invest in your future, not to burden it. Be smart, be conservative, and exhaust every possible alternative before signing a loan contract. Your call to action is this: start your research today. Look into Empower and Prodigy Finance to get an idea of rates, contact your home country banks, and most importantly, speak with the International Student Office at the university that accepted you. They are your best resource for university-specific scholarships and vetted lender information. Thanks for watching.